Welcome to all investors to Smart Investing with Philippe. I hope you had a very good weekend and that the start of the week is going to be quite good. I mean, this week, very important update on the FOMC, so the Fed decision that will be on Wednesday, so don't miss that one. I mean, the market will move depending on where the interest rate go, whether it stay the same, go up or go down. I think the probability that it will stay the same is extremely high, is about 99%. So I think there will be no surprise here. So as we're going to see today, the market has continued its rebound from the low of last week. You see, Friday, I told you that we've seen the whole week, the whole last week, a bottoming process where you have like uptick, downtick, and then a sharp, I would say quite a meaningful rebound on Friday. So it's all showing with the RSI and the bearishness on the market and the VIX coming down. I mean, all these indicators are clear sign that we are bottoming, and now we are going back to the upside until we are not. But I believe that the downside is over for now, and for the short term, we're going to see the market trying to recover to all-time highs, and let's see if it managed to do so or if it's going to be rejected to all-time highs. So what I've done is I've closed all my call position that I was shorting against my existing holdings, and I'm going to wait the market recovers to sell them again when we're going to reach all-time highs, depending on where we see market going. So let's see now with the charts where we are on the key indices, key stocks, and what we expect this week. Let's not make it too long because it's just starting the week. And we're going to see also the headlines on the news, what has been really into the focus of the news. Okay, let's start with the usual QQQ. You can see, I told you last week we had a clear bottoming when you see that the whole week has been actually flat, nothing much on the downside. And today we clearly see we are closing straight, slightly above the beginning of the last week. So basically where we kind of started to see the bottoming process. You can see clearly you have a full candle plus another full candle slightly higher, and today another almost full candle that is higher than the one on Friday, which show clearly that the market wants to rebound at least to the SMA 200 first target. So that means 493. And if it managed to go and close above the 200 SMA, then I think the next target will be 510, which is actually the channel that we were hovering for a few months, the end of last year to the beginning of this year. So that's going to be the next target. You can see that the volume has been quite okay, not so high, but still much higher than the previous months, which shows that the buying pressure that we've seen the last 2 days, Friday and today, has been quite significant, and the volume has been quite supportive. You can see the RSI is trying to reach the level of 40. You can see that the RSI anyway was hovering over 40 and 30. Which is really clear, is a clear sign to me that we are actually witnessing a bottoming process, and I don't think that the downside will continue from this point on. You can see the moving average of the RSI is actually starting to flatten, and once it starts to turn up, then I don't think we're gonna go back down. I don't think at this stage we're gonna back down because all the bad news has been baked in the market, and we have corrected quite meaningfully and it needs another catalyst for the market to go much lower than it is today. So that's a good news. If you look at the S&P 500, I think it's totally the same story, but it looks like the S&P 500 is rebounding much faster than the QQQ. You see, from the bottom of the downside to today, we have already rebounded close to 3.2%, which is significant in 3 days. So basically, the process of the RSI going up is clearly showing here. We are clearly trying to go to the 40, and you can see the average of the RSI the moving average is also flattening, and it's probably going to go and go to the upside on these coming weeks. I don't think the market will be disappointed with the Fed rate. I mean, they expect nothing to happen, so the only possibility the market to be surprised is on the good side. That means the Fed are going to cut rate. I don't imagine the Fed increasing rate, so we can eliminate that. So the only surprise that can happen this week in the market for the FOMC, and hear me again, is on the upside. That means the Fed is cutting rate where nobody was expecting the Fed to cut rate, even 25 basis points. I think you will see a big rally in the equity market, and especially in high growth stocks like the Nasdaq or the Max 7 or actually the high beta name that we've seen collapsing over the last few weeks. So I'm not worried at all for this week. I don't believe that nothing will happen compared to the last previous week. If you look at the Max 7, you can see that the Max 7 is still showing no progress at all, slightly down today, because mainly of Tesla that is down another 5%. But otherwise, the rest of the Max 7 is all flat or slightly lower. And you can see that Netflix has been up by 3.5%. So you can see clearly here, it is bottoming, not going up, not going down, just not moving at all. And is defending its Fibonacci retracement level of 0.61. So I don't think that it will go much lower than that. We have corrected already more than 20%, and the valuation of the Max 7 has come down to earth. And I see a lot of commentators on the news and a lot of experts saying that they are quite happy with the valuation of the Max 7. Of course, it will need a lot of catalysts to go back to all-time highs, but I think the catalyst will be seen on the next earning calls. So don't expect Max 7 to go up again, significantly up again, until the next earning calls for the Max 7. And I think the earnings will be better than expected again, and we can see the Max 7 going up again and maybe go to all-time high again. So the next target, of course, for the Max 7 is going well above the 0.50% retracement level, which is actually coinciding with the moving average of 200-day. That's not a coincidence. Something on the stock level, you can see EMD. EMD is starting to recover. You can see, I told you that it will never go up. It will never go down much lower than the retracement level of 0.78, because otherwise, after that level is broken, then it will go to a full retracement back to 2023, which doesn't make sense at all. What is the fundamental reason for AMD to retrace everything it did from the low of 2023? Not make sense. I hope that you took the opportunity to DCA your holding for the AMD, or to start a new position in AMD. I mean, you will regret not to have done that, because clearly AMD is at the bottom. It will not go lower than that. The negativity and the bearishness in the market was so extreme last week that the last time it happened is back in October 2022, which was at the middle of a crash, minus 38%. Here we are now in the middle of the crash, and the bearishness on all the survey is actually at the highest level since back then. So I don't think you're going to see much more bearishness that the warranty the AMD to go much lower than it is today. I think now it's going to start to reverse back to higher level, and probably go back to the upside on the long run. It's a very good investment. I wouldn't miss you if I was you. Palantir, pretty flat. SMCI flat also. Bitcoin is slightly up by 163%, but actually just showing clearly the bottoming process, and it's showing slightly up, hovering around the 200 moving average. But if it's clearly closing in the next few days above the 200 moving average, then it can go back easily to the next target of 96,000, 97,000. The euro dollar is still increasing, euro is still gaining, but don't expect the euro to go much higher than that. I don't think that the euro is the European country are in a position to see the euro strengthening on the fundamental aspect. And I don't think also that, considering the rate are going to decrease again in Europe compared to the US, then the interest rate differential is going to play in favor of the US dollar. So IWM has also bottomed. I told you that the level of 200 will be extremely difficult to break, because historically you see that channel between 200 and 164 was hovering around the last 2-3 years. So all the rally that we had since 2024 has been cancelled, and now we actually going back up. Don't expect a huge rally for the IWM, but if there is a decrease of rates, I'm not going to be surprised that the IWM is going to see a huge rally back to all-time high. I mean, this is what IWM has been waiting for a long time. It's just clear sign that the Fed now is going back to a clear decreasing of rates. That is going to support small cap. Especially money doesn't want to go to high tech or high beta name in the short term. They want to see first what the earning will deliver. So it could be that small cap will be the beneficiary of the rotation of the money out of tech to other part of the economy. So what else can we talk about? The TLT slightly up, but still continuing its descending. But if you expect the rate to decrease, then you can expect TLT to test again the 94 level and probably go back up to all-time high, up to the 100. I wouldn't be surprised that it touched the 100 in the next 3 months, because that's the way it is for TLT. I don't think that inflation will continue to rise again and again. We've seen on the latest report of inflation that it's pretty much under control. It's slightly moving down. So this trend will continue, and we're going to see that everything will be under control for inflation, and long-term rate will start to decrease. The VIX, you can see it continue clearly to decrease. And when the VIX is decreasing from the peak, you have to remember the VIX is an extremely good indicator for bottoming. And the peak of the VIX is actually the bottom of the downside movement. And the bottom of the downside movement was actually around the 12th of March. Actually, the whole last week, because it went up and down, and not really moving, only moving sideways. I would bet a lot of money on the fact that the bottom is here, and now we're going to go up. At least on the short term, we're going to go up again and try to regain all the loss that we've seen the last 2 months. And I invite you to subscribe to the channel and to like and to make a comment, because I want you to witness exactly what I'm telling you. And I'm not going to be shy if I'm wrong, but I tell you, all the indicators of bottoming is showing. And as long as I've been in the market, that always have shown a clear bottoming of the downside movement that we are witnessing right now. That doesn't mean there couldn't be another downside in 2 or 3 months. But first, they are going to try to regain. And then if there is another catalyst for the market to go lower again, then that's another downside movement. But this downside movement is done. You can see all the sectors is actually going up, which is a clear sign of recovery from the downside. All the sectors are going up, and this is a clear movement, except for the high tech, the whole market, the whole Nasdaq, the whole S&P is going up. So there is a clear sign that the overall market, except Max 7, is recovering healthily. And we're going to see some upside in the coming days and the coming week. So now if we move to the economic calendar, you can see today we had some retail sales numbers. The retail sales number has been good. Retail sales month over month is 0.2%, forecasted 0.6%. Here we can see that it's slightly lower than expected. Retail sales year over year 3.1%, and prior was 3.9%. There is a small deceleration of the retail sales growth, but it's still growing. And the deceleration is nothing at all to worry, it's not like a collapse of the retail sales. So tomorrow we have nothing really of major economic number to expect. But on Wednesday, be ready for the Fed interest rate decision and the FOMC economic projection. So you will see the Fed having a press conference, and don't miss it. Try to see in your calendar and where you are sitting in the globe, what time is the conference, and don't miss it, and listen to what Jerome Powell is going to say. It's quite interesting. On Thursday, very important numbers is continuing jobless claim, initial jobless claim. So you're gonna see the latest unemployment figures, and that's it for the week. So good start of the week. So you see the panic seems to be over. The headlines on the market, the Bloomberg, is that, of course, S&P 500 extend its rebound after sharp correction. So they are also showing the headline that the S&P is actually continue its rebound from last Friday. And you can see also that the retail sales is a bit disappointing, and it adds to concern to the US outlook. But I think they try to scare you and to be a bit fearmongers, and they want to have a lot of clicks. It's more like clickbait at the headlines, because there is no concern at all about the US economy. So otherwise, the Fed is in wait and see mode. Investor want reassurance it will act if needed. So although that the market don't expect interest rate to go down on the next FOMC meeting on Wednesday, they still want to have clear indication of Jerome Powell that they will very soon be on track to decrease rate. Otherwise, that's the headline for the market. Nothing so much. And Russia say Putin to talk to Trump as US urge Ukraine trust. So it could be that we'll have a peace agreement between Russia and Ukraine. So hopefully, if we have this peace agreement, the market will react positively to that peace agreement, and it can actually support the rally and the bottoming that we've seen the last 2 days. Other than that, I will release a video probably today or tomorrow about what is the most important skills for investor to be successful in the market, which is the psychological aspect and the mindset that you have when you are investing in the stock market. So this video is a must watch for all investors if you want to be successful in the market. So I invite you to subscribe, click the like button, and put a comment so it can help me to increase my audience, to increase my reach. And as soon as I reach 100 subscribers, I will start to put a lot of trainings and a lot of sessions online, so we can all participate as a group and support each other. And I will show you all the inside of how I manage my portfolio for decades and what I have learned so far over the last 30 years as a professional investor for the biggest institution in the world. And I invite you to share this video and to help me grow this audience. Please help me. Subscribe, press the like button, put a comment. It doesn't cost anything, and I appreciate it. Have a good evening. Bye.